Well, good morning. Yes, it's me, Kenny Polcari, your host of the party, and I'm coming to you live from Jupiter, Florida. And yes, it's kind of like, it was raining this morning. Now it's sunny. It's going to be raining. We got this storm off the coast. And so it's always unsettled here in Florida when that happens. In any event, today is Tuesday, October 28th, 2025. And here are the things that you need to know to get your day started. Well, guess what? Investors are celebrating the framework of this new China trade deal that Scott Bessent and Jamie Greer announced, right? Trump travels across Asia making all kinds of deals. The Wall Street Journal announces the Fed finalists. My vote? Ricky Rieder of BlackRock. Gold suffers some profit taking, traded all the way back to the high 3,800s overnight. Oil is down, bonds are up, and yields are slightly lower. And Kathy Woods, well, she just states the obvious. And what are we having dinner tonight? We're having the pan-roasted chicken parts with peas and potatoes. It is a simple dish, classic one you'll always enjoy. So, listen, stocks surged on this trade breakthrough and closed higher on Monday evening. And yeah, I know it's starting to sound like a broken record. New high after new high after new high. When is it ever going to consolidate and pull back? I'm not sure anytime soon. But this time the catalyst came from this announcement by Scotty Bessent and Jamie Greer that they've succeeded in creating a framework for trade with China. And this time, it feels a little bit more real. Gigi has been boxed into a corner and finally seems to recognize that the only way out is for him to come to the table and make a deal. Now, to be fair, both sides got their wins. And in fact, the media is already calling it an array of diplomatic victories. And global markets cheered the news, right? Under the agreement, the 100% tariffs are off the table. The ones that Trump threatened are now off the table. A huge relief that removes what would have been a devastating blow to the Chinese economy. In return, Gigi has agreed to delay those new licensing demands on rare earths, right, for at least a year, providing much needed stability to the tech sector, which depends heavily on those resources, right? Now, meanwhile, Trump secured parallel deals with Australia, Thailand, Malaysia, and Cambodia to try and diversify the rare earth supply chains, right? Effectively reducing the U.S. dependence on Chinese materials, and quite honestly, probably other parts of the world. And in another symbolic step, China will resume large-scale purchases of U.S. soybeans and other agricultural products, helping ease domestic shortages in that country and signaling a return to normalized trade, so farmers in this country should be thrilled. Now, perhaps most notably, Gigi is also conceded on fentanyl, right? Agreeing to strengthen the cooperation to stem the flow of this deadly drug into the U.S., a key political and humanitarian win for Trump in Washington. Now, before you go all in, analysts are already cautioning that some of the deeper issues remain unresolved. Right? The sticking points, U.S. national security and concerns over China's intellectual property have been quietly just kicked down the road. So yes, this program, it's okay. It's good. But I don't know if it's over, right? The issues are going to come back around for sure. But for now, the bulls are dancing. And while the trade clouds have cleared for the moment, they're still hanging out here offshore. So put it all in perspective. Now, by the time the bell rang yesterday, though, the screens were green. It was hard to find anything in the red unless, of course, you looked at the contra trades and gold. They did not have a good day. The dog lost 0.7, the SH down 1.2, the PSG down 1.8, the VIXI down 3.3, and the SPSX, which is the triple leverage short, down 3.5%. And gold, that got smashed, slicing right through 4,000 like a hot knife through butter. Thank you, Barbara Streisand. It lost over $130 or 3.2% to end the day at 39.82. And this morning it's under pressure again. It broke through 3,900 overnight to trade as low as 38.86 before rallying back a bit. Now, at 6 o'clock this morning, gold was trading at 39.05. It is now down 11% just in a week. And it appears as if it wants to test short-term trendline support, which is all the way down at 37.50, and that's down another 2% from here. But let's not lose focus. Gold is up 49% year-to-date, even today. The move lower in gold can be credited to a couple of things: easing trade tensions, a strong earnings, no sense of a collapsing economy, little impact from the tariff hysteria, and just some old-fashioned profit-taking. I mean, let's be honest. Gold was up 110% in 2 years. And while that's great, remember it's gold. It's not an AI company. It's not an AI technology. Now, if it fails to hold short-term support, then don't be surprised if we see it test down to 3,500, a level that proved to be resistance for about 6 months. Between March and September, kept hitting its head on 3,500. And so that now becomes should become strong support on the way down. Now, stocks reacted differently, though. The Dow added 337 points, or 7/10. The S&P was up 83 points, or 1.25. The Nasdaq added 432 points, or 1.3%. The Russell up 7 points, or 0.25%. The transports added 208 points, or 1.3%. The E-weighted S&P up 35 points, or 0.5, while the Mag 7 stocks added 860 points, or 2.6%. Earnings continue to come in strong. Of the 17 names that reported yesterday, 12 of them beat on both the top and the bottom lines. And their guidance was not negative. That leaves us with about 85% beat rate of the companies that have reported so far, a level that we have not seen in a while. Now we got 29 or 30 companies that are going to report before the bell, and they include Sherwin-Williams and Polaris and IQV and MSCI and THC, Regeneron, JetBlue, Cisco, UPS, and PayPal, right? UNH, Glassworks, Danaher, and Royal Caribbean. And these companies represent a range of industries: specialty chemicals, consumer retail, life sciences, financial services, hospitals and healthcare, biotech, airlines, food services, logistics and the supply chain, fintech and digital payments, managed care, insurance, specialty glass, ceramics, and of course the home builders. And after the bell, we're going to hear from Mondelez, we're going to hear from Visa, we're going to hear from STX, and these and a couple of others. And these represent global stacks, senior care living, credit cards, oil field services, data, storage, and hardware, and commercial and residential building equipment and data security. All eyes, though, now are on the Fed again, starting today and into tomorrow, and so it begins. Today marks the start of the October FOMC meeting, and please, don't ask what they're going to do. If you've been awake for the last 3 months, you already know this. They're going to announce a rate cut by 25 bips, and then they're going to hint at another rate cut in December. The market already knows this. The market has already priced this in. So don't be surprised if we get that buy the rumor, sell the news type of reaction, right? Not a collapse, but just a consolidation. Now, unless JJ comes out and promises a series of additional rate cuts in the new year. If he does that, then that'll cause a different reaction. But I'm not sure there's much room left for stocks to run higher on this particular headline, the one we're announcing about today in December. The bottom line, yes, the cut is coming. The question now is what happens next? That's going to be what the market reacts on. Meanwhile, the Wall Street Journal is out today with a piece outlining who's in the running to replace JJ. And the list looks like the usual suspects. It's got Kevin Hassett, Kevin Warsh, Chrissy Waller, and Michie Bowman, all current Fed officials. The dark horse in the race is BlackRock's Ricky Rieder. Now, that's an interesting choice. The market seems to expect one of the Kevins to get the nod. But if I had a vote, I'd vote for Ricky to take the reins. And here's why. The guy's got presence. He's 64. He's good looking. He hits the gym at 4 o'clock in the morning every morning and maintains an intense workout. He is the CIO of global fixed income at BlackRock, where they manage $12 trillion of investor assets. He earned his undergraduate degree from Emory and his MBA from Wharton, right? So he's not a dummy. He's got market sense. He's got a global perspective. He's got a deep understanding of risk dynamics that could bring a steadier hand to the Fed in this new era of AI deglobalization and inflation volatility. But most of all, what I like is he's an outsider, something I like in this new era, and it might be exactly what the Fed and we need at this moment. And so the clock ticks. Now, this morning, U.S. futures are breathing, and yes, they're a little bit higher, and in fact, they're higher ever since I wrote this note. The Dow was up. It was up 52, but I guess now up 170. The S&Ps were up 1. I think they're up 8. The Nasdaq was up 23. I think those are up 50. And the Russell was down 8 points. I think it's just flat. Now, the big day is tomorrow. After the bell, we're going to hear from some of the GOATs. Google, Meta, and Microsoft tomorrow. Amazon and Apple are going to come out on Thursday. NVDA is not until November 19th, and Tesla has already reported. Bonds ended the day higher yesterday, and that put a little bit of pressure on yields. The TLT and TLH both up about 0.3%. The 10-year is now once again below 4% at 3.97, while the 30-year is yielding 4.55%. 12-month CD rates are hovering around 4% and likely going lower, while 30-year mortgage rates are 6.2% and also likely going to go a little bit lower. Bitcoin's trading at $114,500, while Ethereum is trading at $4,100. Oil has backed off. Intermediate trendline resistance was at 62.60. That held firm. And when we tried to pierce it, we found plenty of sellers. This morning, oil is down about 75 cents at $60.56. Once again, below all three trend lines, putting us in that $55 to $62 trading range. Now remember, street analysts are expecting oil lower prices due to a supply glut in early 2026. Now Brent's expected to come into the low mid 50s, and that means WTI would be trading in the high 40s. A welcomed relief for so many, for consumers, for companies, for transports, for manufacturing, all that stuff, because lower energy prices goes right to the bottom line. The SP closed at 68.75. It was up 83 points, leaving us yet in another new century. We have now traded in 20 different centuries in 2025, from a low of 48.35 to yesterday's closing high of 68.75. This morning, Cathie Woods of ARK fame, right? That ETF is up 59% year to date, is sounding the warning bell at this Davos in the desert, the Saudi Arabia's Future Investment Initiative, FII, in Riyadh. She joins the likes of JP Morgan's Jamie Dimon, Fed Chair JJ Powell, OpenAI's Sammy Altman, and of course, Slatestone's Kenny Polcari. Now, she is not saying that we're in an AI bubble, but rather saying that when rates start to go up, tech names will take a hit, saying, we think there's going to be a reality check, to which I'd say, no shit, of course there's going to be a reality check. She pointed to something that I've been saying all along, algorithms. And we all know how they work. When they see a headline that they don't like, they go into sell mode, oblivious to the damage that they wreak on the markets as well as on investors. But hey, we also allowed that to happen, the same way we allowed China to have so much control over the supply chain. So shame on us. But that's a story for another day. Here's your countdown. It is now 28 days of the government shutdown with apparently no end in sight, or at least not this morning. There's 2 days until the Fed announcement, today and tomorrow. We got 32 days until the critical Black Friday. I made a mistake yesterday in my calculation, so I corrected it today. 58 days until Christmas and 64 days until the ball drops in Times Square. Now, feel free. Let me review your portfolio. Call me for a complimentary, no obligation portfolio analysis at 561-931-0190. I'm always there to take your call. It's a direct line to me. Okay. So what do we have for dinner tonight? We're having the simple pan-roasted chicken parts with peas and potatoes. It is simple to make, delicious. It's not a tomato sauce. It's a white sauce, white wine, chicken stock. It's delicious. For this, you need the chicken parts. Think legs and thighs on the bone. You need chicken stock, white wine, which is optional, but I always use it. You need salt and pepper, butter, celery, carrots, and onions that you're going to dice. You need fresh basil. You need cut up potatoes and frozen peas. Now, you want to peel the potatoes and cut them up. Now, in a large frying pan, you're going to heat up some olive oil. When it's nice and hot, you're going to add in the seasoned chicken parts. So you're going to fry them till they're brown on one side, then flip them to fry the other side. When you flip them, you're going to add in the diced veggies and like a half a stick of butter. Let that all cook and melt together for about 10 minutes or so. Now you're going to add in a half a cup of white wine, allow the alcohol to burn off. After that happens, then you're going to add in 1 cup of chicken stock. You're going to cover it. You're going to let it cook on low, turn the heat down to low for 15 minutes. Then you're going to open it up, add the fresh basil, the potatoes, and the frozen peas. Season the whole thing again with salt and pepper. Then cover it. Let it cook for another 25 minutes. And then when it's ready, after that, it's going to be nice and ready, delicious. The potatoes are going to be nice and juicy and a little bit soft. The peas, everything is going to come together. When you serve it family style, just in a platter in the middle of the table. And trust me, you can thank me later. It's a simple dish. Will soon become a family favorite. In any event, until tomorrow, take good care.